Hi, everybody. This is Kyle Healy from NFP with another Big Question video series where employees here at NFP get an opportunity to talk with subject matter experts, both internal and external, to get answers to the big questions that our clients are looking to answer and get help with these days in the middle of a global pandemic. Joining me today is David Aronson from Peanut Butter, a valued preferred partner and vendor of NFP's focused on the student loan assistance space. David, thanks for joining me today. You want to give a quick introduction?
Thanks for having me, Kyle. It's great to be here virtually. Peanut Butter is a student loan assistance provider that helps employers across the U.S. attract, retain, and engage college-educated workers. We deliver a comprehensive student loan assistance solution that gives employees the resources they need to manage their student debt. It makes it easy for companies to contribute towards student loans whenever they're ready.
Yeah, that's awesome. And obviously, student loans was kind of a big issue in and of itself for a lot of employers, especially the types of clients NFP tends to work with, well before kind of recent events started to spiral out of control. But obviously, anybody with kind of debt going into a sort of huge economic hit right now is struggling. Can you talk to us a little bit about the CARES Act, which was specific relief for those affected by COVID and recent events? In there, specifically, how did they kind of reach out to try to assist student loan debt holders or even employers looking to help students with debt?
Yeah, in these uncertain economic times, student debt looms large for many of the members of our workforce. The average student loan holder today has over 31,000 outstanding. They're paying more for their student debt than they are to own a car. And the government recognized that in this downturn. They passed legislation through the CARES Act that allows employers to contribute tax-free toward employee student loans. So what the legislation says specifically is if the company adopts a Section 127 educational assistance plan that includes the student loan repayment program, then they can contribute up to $5,250 through the end of 2020, tax-free. So that means no payroll taxes on the employer side, no income taxes on the employee side. Previously, when companies would contribute, let's say you paid $100, the company would incur about a 10% payroll tax hit when you add up FICA, FUTA, SUTA. On the employee side, they'd be withheld for income taxes, both at the federal and state level, as well as their share of Medicare. So now any company that had been considering offering student loan repayment has an even less expensive way to engage college educated workers, cost them 10% less than it did just a couple of months ago. It's 30% more impactful for employees. And what's so important about this is that companies can contribute while employees can't. So the CARES Act was a long way to align our interests so that companies and their employees can work our way forward together.
So it seems like, I mean, great incentive on both sides to explore something like this. It's easy to say, hey, this is perfect for everybody, but I'm sure there's certain industries, segments, businesses that this could be even better for. It could be a huge focus for them, even a big differentiator right now. Can you talk a little bit about, from your perspective, what types of companies can really benefit from exploring this right now, even in a time where it doesn't maybe seem so logical to be adding benefit? This could be the right kind of thing to offer with the most bang for the buck, so to speak, during this time especially.
Absolutely. The student loan assistance has proven to be an effective way to attract, retain, and engage college educated workers. So in today's economy, the companies that are looking to attract workers are are employers in essential industries. So Peanut Butter is helping Instacart right now attract hundreds of thousands of new shoppers by providing student loan resources to all of those individuals. Others in healthcare and hospital systems where they're trying to pull people out of retirement even because the talent situation is so bleak. They need to get the right people into their systems, into their hospitals, and to keep them motivated and on board. And student debt is a major motivator. So hospital systems, healthcare organizations of all types are adopting student loan assistance to attract essential workers and others that need essential workers like grocery for their managers, distribution organizations, and logistics companies. The second big category is any employer of the highly indebted. So employers in the education industry, in the financial services industry, in the professional services industry, and technology. Student debt is incredibly prevalent in these sectors. About a third or more of the workforce in those four sectors hold student loans. And in education, as an example, the average person with student debt has close to 50,000 outstanding. So even modest contributions can make a meaningful impact on those organizations' ability to get and keep the right people on board.
Yeah, modest contributions. I mean, for some folks, like you were just mentioning, given the type of burden they might be holding, this is the equivalent of a raise, of a promotion, of right. I mean, like the take home is real. So, talk to me a little bit about how you see the focus that CARES has put on the employer's ability to kind of offer this benefit efficiently, and how this might be one of those things that we keep talking about, all the new normal that might result from kind of COVID and the coronavirus. Talk to me a little bit how you see some of this hanging on, this becoming kind of one of those things that is a table stakes benefit as opposed to some kind of fringe thing that some law firms offer sometimes.
Yeah. So student loan repayment had been growing in popularity pretty rapidly leading up to 2020. In 2018, SHRM estimated that 4% of employers were offering student loan repayment. In 2019, it was 8%, so 100% year over year increase. And we were seeing that continue to increase into 2020 when now with the CARES Act, this can be done on a tax-free basis. It's interesting how companies have chosen to offer this benefit. And I mentioned before, modest contributions make a big impact. The most popular student loan repayment plan has always been just $50 a month. So companies choose to, well, now under the CARES Act, they can contribute much more, even on a tax-free basis, and they always could contribute much more. What employers have realized is that they're not so much competing for talent based on how much they offer in student loan repayment as they are competing for talent based on whether or not they offer the benefit at all. So most companies choose to offer $50 per month. They make all full-time employees eligible. And they see about a quarter of their workforce elect to participate. What companies don't want to get involved in is documenting the plan, rolling it out, building communications programs, describing it to employees, answering questions for them, reviewing loan information to make sure it complies with all of the requirements of the program, moving the money around, documenting everything for employees. That's where Peanut Butter comes in. We have our digital solution for student loan assistance helps the employer set up the program, facilitate enrollment online so employees can enroll in just a couple of minutes. They receive a full explanation of the benefit, a video, on-screen instructions. They can call our support center if they have any questions. And then once they're enrolled, we keep them up to date, communicating how much faster they're getting out of debt as a result of their company's help. And that's what helps reinforce the longevity of employee relationships. It's a monthly reminder that, hey, your company's doing something great for you. As a result, you're this much closer to being free from your student loans.
Yeah, that is great information and a great point, especially as we start to kind of normalize, hopefully at some point in the not so distant future.
Yeah.
Organizations are really going to want to hang on to the workers that they kind of retain, because most likely they're going to be the most productive, or the employees that they can't afford to lose. All great kind of thoughts around why not only kind of deploying this benefit now, but also maintaining it and maybe growing it in the future makes a ton of sense.
One other aspect regarding the longevity of student loan assistance. So the benefit had been growing in prevalence in 17, 18, 19, even as a taxable benefit. And companies were seeing great results. They were able to hire as much as 13% faster, retain talent 36% longer. They're seeing material improvements in gender and cultural diversity and employee engagement. With it being tax advantaged, there are now it's now the impacts for the company are likely to be even greater. The CARES Act has authorized this at least through the end of 2020, and we believe that it will be extended, if not on a short to medium term basis beyond 2020, on a permanent basis. And the reason that we believe so strongly that it will be extended is that the language in the CARES Act was adopted from two bills that are also currently active on their own in the House and the Senate. Those bills have today bipartisan co-sponsorship from 62% of the U.S. House and 65% of the U.S. Senate. So already a majority of Congress supports this legislation, and it's from both sides of the aisle. And it's likely that as we move forward, this alignment of incentives, helping employers keep people working, getting them the help they need with their student debt, is something that's going to continue to be tax advantaged and continue to proliferate.
Consensus among both parties, something we can't say for a whole lot of topics out there. So for me, that's all I needed to hear, David. This sounds even better than I thought. Thanks for joining us today. We really appreciate all of the information. Hopefully we'll be in touch soon, David.
We appreciate the partnership, Kyle. Thank you so much to NFP, and look forward to talking with you and your team soon.
Everybody make sure you check out getpeanutbutter.com for more information and insights on all of the solutions David talked with us about today. Also remember, keep checking out www.nfp.com for all of the latest insights and updates from your partners here at NFP as it relates to your insurance policies and risk management strategies. For now, I'm Kyle Healy, hoping you all stay well, stay safe, and I'll talk to you again soon.